Hey, welcome back to YT Finance, and this is part 2 of the original video that I had to split into 2 different segments because it was over a half an hour long. So if you're coming from the original video about SoFi Technologies, this is part 2. If you haven't watched part 1, don't worry about it. Feel free to watch the entire Palantir video and then go and watch the SoFi Technologies video that I released before this. So without further ado, don't forget to go and annihilate that like button for more videos on Palantir Technologies. Subscribe if you are new, and now let's jump right into the video. Recently, the PLTR stock price has surged by around 3.84%, which would equate to 25% upside for this year. However, the stock price did crash around 65% during the year of 2022, so it's good to see that this stock is making a comeback. One of the reasons why professionals are saying that this is a great company to buy right now is because they are growing their overall customer count to where they recently grew their customer count year over year by 55%. Over the last several months, many businesses are struggling to scale back and cut their overall expenses because they anticipate that a potential recession could take place this year. But Palantir Technologies is actually growing their overall customer count even during a negative macroeconomic environment, which is extremely impressive. Palantir is showing their strength by adding 30 new customers in Q4 of 2022, which would equate to a 55% growth rate in their overall customer count year over year. The second reason why professionals and experts are looking into this company closer is that Palantir's net retention rate is extraordinarily high at 115%. So this then begs the question, what is the net dollar retention rate? Well, essentially, the net dollar retention rate looks at how much more existing customers are spending versus the prior year. And this is used as a fantastic indicator regarding how satisfied customers are with Palantir's technology and how likely they are to re-sign contracts with Palantir, thus putting more revenue and money in Palantir's overall pockets. This has led to the company's strong 24% revenue growth rate over the last year. The third and final reason which experts highlight that this company is absolutely phenomenal is because they have a very high gross margin that clocks in at around 80%, and a high gross margin enables a company to grow its bottom line easily and more effectively as time progresses and as the business grows. So it looks like things are looking up for Palantir Technologies. This is a huge milestone for Palantir Technologies, and many investors believe that Palantir Technologies is a buying opportunity right now, considering the future growth prospects of this company. Speaking of their future growth prospects, for the year of 2023, the company is projected to bring in revenue between $2.18 billion and $2.23 billion while remaining profitable. Because remember, as of the recent earnings report that we had, they did achieve GAAP net profitability. However, we do need to keep in mind that the economy could weigh down growth stocks, including Palantir Technologies, in the future. And after this, we'll be dissecting an article regarding how one financial reporter believes this company could actually become a penny stock. But as for this article and this author, they believe that Palantir is underrated and it gives investors a good buying opportunity this year, especially if you are a long-term investor. If you haven't noticed the recent news update, Palantir plans to cut around 2% of its staff to reduce costs. And I actually have no problem with this. Only 2%, that's absolutely nothing. To where a spokesperson for Palantir even said, and I quote, "Our company is at an inflection point, and to continue to evolve, we are making the tough choice of reducing teams in several areas. While less than 2% of our workforce is impacted by these changes, these are incredibly painful decisions, but the right ones for the company's future," end quote. So I honestly have no problem with this, especially if they are getting rid of employees who are not furthering the overall company's ability to scale their overall revenues. And as of the end of 2022, the company employed around 3,838 people. Now let's jump over to that very bearish negative article to where this author believes the company is actually a penny stock, dropping below $5 per share. One of the reasons why he believes this is because of Palantir's deteriorating sales growth. And let me tell you the parts where I agree with him and the parts where I don't agree with him. So he says that Palantir's sales growth is by far the most important metric, and this is exactly where Palantir is disappointing. So let me agree. I agree that their overall sales growth is one of the most important metrics, and that they have not exactly met investor expectations. The author goes on to say, unfortunately, both segments continue to fall short of expectations, and he's referring to their commercial segment as well as their government segment. Now, I don't want to talk about that that right now, but what I do want to talk about is why he believes this company will become a penny stock, and essentially, he's using technical analysis metrics. He says that because the PLTR stock has now fallen below the critical 200-day moving average line, which currently sits at $8.18, he believes the company could then fall below their 50-day moving average over the short term, which is currently at $7.39, and once it does, it's going to gap down to as low as $5.84. And he even believes that there is further downside potential lower than $5.84 in store for this company over the short term, to where he believes it could fall well below $5. Technical analysis is very different than the analysis of a company's fundamentals. I look at the company's fundamentals and I project their future growth as a business. I don't bet on a stock whether or not a stock goes up or down. I invest into a business, and if I like the future projections of the business, I invest into it, and I honestly don't pay much attention to the share price in the short term. Now, over the short term, sure, this guy's technical analysis could be correct, but I would have my doubts. Now, let's jump to a portion where I actually agree with him, where he says that Palantir is overvalued. And yes, I actually agree. Palantir is overvalued compared to their current growth rate, considering that management originally said 2 years ago that the company was anticipated to grow at a 30% CAGR in terms of their revenue from now until 2025. But as of recent forecasts, the company is only set to grow around 15.7%, which drastically falls short of that 30% CAGR. This means that Palantir should not be sporting a 7.8 times their 2023 sales. They should be trading much cheaper than that according to these future projections. So let me agree with the author saying that yes, Palantir in the short term technically is overvalued, but let me add something. Honestly, the majority of growth stocks are overvalued if you base your projection off of the current year, because the whole point of a growth stock is you are projecting what the company will be worth in the future, and then you discount that growth back to the firm's current share price. So it's unfair to take a growth stock and make statements of them being overvalued based off current metrics, considering that growth companies are based off of and valued off of future metrics, not current metrics. So it's somewhat misleading what he's doing here. However, he says if he were to value Palantir between 2 to 3 times their 2024 sales, that would be more appropriate. And again, I would agree with that. But the fact that Palantir is growing into their valuation shows you that this company is rapidly growing. So I disagree with him on that regard. Out of nowhere, he comments that the fair value range of this company is between $2.50 and $3.73, putting the company well into penny stock territory, but he doesn't give us any data to justify this based off of future projections. Again, we're talking about a growth stock here. You can't just make up price targets as if a growth stock is based off of their current year metrics. That's just absolutely misleading. However, he does say that his thesis could be wrong, especially if Palantir grows their sales faster than originally anticipated. And of course, I would agree with him on that. I do think he is wrong, and I believe that if they continuously grow their revenues and we discount them out for the future, this company could be a good buying opportunity over the long term. But in the short term, I do think that the share price could suffer based off of macroeconomic factors. However, let's end with a positive note to where this author believes that Palantir is a buying opportunity, and this is why he is still in on Palantir Technologies. He is personally bullish on this company, and based off of future projections that we already went over in this video, which I won't rehash and repeat myself, in the end, he says that Palantir's short-term price target should be around $10 per share, and the sky's the limit from there. I would say, yes, the company's overvalued. However, based on future projections, the company will grow into their overall value, and then from that point onward, it's just going to be pure growth. So I'd love to hear your thoughts down below. Don't forget to annihilate that like button for more videos on Palantir and SoFi Technologies. Subscribe if you are new, and I'll see you in the next YT video.